Hello viewers and students, welcome to my channel. My name is Muhammad Arif. Having discussed introduction to bill of exchange and promissory note in my last two videos, in this video I'm going to talk about situations, actions or scenarios arising out of bill of exchange transactions. If you find this video useful, please like it, share it and subscribe my channel. Thank you. This is really an important video because it covers in detail different actions, terms, and scenarios that may happen in bill of exchange transactions. For example, bill may mature normally and necessary journal entries can be made in the books of all the relevant parties. Bill may be discounted by the drawer or holder from the bank to get immediate cash. The drawer or the maker of the bill may endorse the bill to transfer it to another person or party. The bill may be renewed for another term or period by the parties by mutual consent or agreement if the debtor or drawee is unable to make payment on the maturity date. The bill can be settled or retired prematurely before the maturity date if the drawee or the payer has sufficient funds and he wants to settle it now. Bill may be dishonored if the drawee or the payer has no funds to honor his commitment for payment on the maturity date. A drawer can get the bill noted by notary public to establish beyond doubt that the bill was dishonored despite its due presentation. Let us now talk about these scenarios in detail. First, we look at maturity. A bill of exchange matures on a maturity date. The maturity date is on which a bill of exchange or a promissory note becomes due for payment. There are certain rules or conventions around the maturity date. For example, 3 grace days are added to the maturity date if a bill is drawn on 1st Jan 2023 and it is due for payment after 3 months. This means it should be paid on 1st April 2023, but there can be 3 grace days added and the drawee can make payment on 4th April 2023 instead of 1st April 2023. If the maturity date falls on a public holiday, then the bill will become due on the preceding business day. When an emergent holiday is declared under the Negotiable Instruments Act 1881 by the Government of India, which happens to be the date of maturity of the bill, then the date of maturity will be the next working day immediately after the holiday. Discounting. If the holder of the bill needs funds immediately, he can encash it at the bank before the maturity date. However, the bank will deduct an amount called interest or discount for the service it provides. This is the sacrifice the holder of the bill will have to make to be able to get amount immediately rather than waiting till the maturity date of the bill. Endorsement. Jim the drawer draws a bill on Alex the drawee. Jim owes a certain money to his creditor, namely David. Instead of making payment to David, he endorses a bill in his favor. This means that a holder or a drawer of a bill may transfer it unless the transfer is restricted. The drawer endorses a bill by putting his signature at the back of the bill along with the name of the party to whom it is being transferred. On the due date, Alex the drawee makes payment to Jim's creditor, namely David. Renewal of a bill. The acceptor of the bill foresees difficulty in meeting his obligation to pay on the maturity date. The acceptor approaches the drawer for extension of time for payment. The old bill is cancelled and a fresh bill is drawn with new terms of payment duly accepted and delivered. This is called renewal of the bill. Noting of the bill is not required as the old bill was cancelled with mutual consent. The drawee may have to pay interest to the drawer for the extended period of credit. The interest is paid in cash or may be included in the amount of the new bill. Retiring of a bill. A bill can be retired before maturity date by mutual understanding between the drawer and the drawee. Retirement of a bill normally happens when the drawee has funds at his disposal and makes a request to the drawer to accept payment before the maturity date. To encourage the retirement of the bill, the holder or drawer may allow some discount called rebate on bill for the period between the date of retirement and maturity. The rebate is calculated as a certain rate of interest. Dishonor of a bill. When the drawee fails to make the payment on the date of maturity, a bill is said to have been dishonored. Liability of the acceptor is restored. The entries made on the receipt of bill should be reversed. Noting charges. A proper presentation of a bill to the acceptor is necessary on the date of maturity during business working hours. Getting a bill noted by notary public may be preferable to establish beyond doubt that the bill was dishonored despite its due presentation. Fees charged by notary public for its services is called noting charges. The notary notes date, fact, and reasons for dishonor, the amount of noting charges. If the bill is not expressly dishonored, the reasons why he treats it as dishonored. Noting charges are borne by the drawee. In my next video, I will cover all the journal entries related to the situations or scenarios I discussed in this video. I'm sure those will be very helpful to students to prepare for their exams. Please stay tuned. Thank you for watching.